Was good? What's goody? What's up? We got Juan. What's good, G? Who we got on here? We got 9 people, I think, from what I can see so far. Um, how was y'all's New York? New York was very easy today. I think New York was one of the. It's funny because New York was one of the biggest complaints that I saw throughout all of TikTok or like all of Instagram of like, the mentorship traders and all these people. They were pretty much all crying and complaining about like, oh, price action sucked. It was terrible. It wasn't bad, bro. If you're not trying to trade ICT and you actually have a legit strategy, you're gonna make money. Like, I'm not trying to bash on ICT, but the guy himself who made ICT isn't even profitable. He sells a course. So you got to figure out a strategy that actually works for you, that makes sense for you, and you need to find ground rules that you can base your strategy off of every single day. And pretty much, what I'm gonna be covering, it's just like the importance of continuations over reversals, because we all know that continuations are more probable. And as a trader, you always want to be taking the more probable setups, right? Because as a trader, your job isn't to be right, it's to take higher probability setups and to make decisions based upon higher probability, right? Your decisions matter every single trade you take. Whether you break even, you lose, you win, everything matters. So what I'm gonna kind of start off with is how to find your daily bias, which a lot of people actually don't know how to do. Like, I'll see people taking the wrong side of the market. Some people trying to short when it's a very obvious long, or when people are trying to long when the shorts were just kind of a layup. And some days though it is kind of harder because price action on a bigger time frame matters. Like, say for example, say there was no, let's go to today. Say there was no like proper fair value gaps or really any like engulfing candles to play out of. Let's just say like maybe market was doing this, right? Maybe market was chopping like that. Imagine this was New York and it was just chopping that whole session, right? These are really days where you want to find low R moves and just kind of get in and out of the market. And a lot of people today complained about like, oh, why was New York so difficult? Why did this not play out? And if your whole concept of trading is just ICT, pretty much just like going based on patterns, you're probably going to struggle in trading quite a bit. And the reason why I'm saying that is because most people that have a discovered edge, they don't share it across the world, right? You got to think about people like Trade House, and you guys are gonna understand what I'm saying about in a second. So it does tie into what your bias means, because with Trade House, you see a lot of these guys, bro. They're up very well, and they are very good traders, right? Like, they are literally government tracked to be on Zinrai. They have a MyFX book where you can see all of their data. Are they profitable? Are they consistently making money? Right? And you see these other guys who sell patterns or ICT on Instagram, but you got to realize all of their money is coming from their course, for one, and two, they've usually been wrong as of late, especially. Like, I've seen a couple of these mentors take like obvious take like, or they don't take the obvious trend and they go try to go the other way just because they see their pattern. And I'm telling you, if you're pattern trading and you're just only focused on like an inversion, you have to make sure everything is aligned, right? So like, prime example, let's go for today. Let's go back. New York ends. All right, we'll do it around the open, actually. We'll do it like right here. So obviously at the open, you had a very bullish move at the open. A lot of people complained about this. They're like, dude, market ran, pretty much gave no other plays for the rest of the day. That is genuinely not true. There was definitely more plays you could have taken on this asset. Obviously, in my opinion, Dow was cleaner. I liked Dow a lot more. That's why I took it. You guys saw me take Dow like 6 minutes into the session and hit my TP. And I, again, from back testing, I know that that TP was exactly where the market was going to go and where it was going to stop at. Like, I had a very strong conviction right here. This was my setup. Well, you know, we'll start the daily bias on Dow, since I took Dow. We'll start it on Dow instead of Nas. So for Dow, obviously you can see the daily bias. Price is very bullish, right? You're creating higher high, higher low. You're respecting this trap candle. You see that this wick has a very aggressive push off of this fair value gap. Let me take off everything else so you can see it. You can see that we have this fair value gap. Price just wicks, runs. When you see this happen, especially around the open, you're probably going to get somewhat of a bullish move. Like, you're probably going to get something that looks decently bullish. Especially, like, here. This was a layup. But for me, obviously, my initial setup was higher. But this is what your daily bias should have been, was this fair value gap, right? You go into a fair value gap. This is what's something called a Peter A. So meaning, like, this is like your key level. This is the key level of the market that you need to be focused on. You need to be focused on trap candles, order blocks, and fair value gaps. And based upon which gaps are respected and disrespected, it's going to ultimately show what your bias is for the day, right? You see that we have a very obvious bullish fair value gap. I have it green just so I know. Green usually means up on green candles. Red means down on red candles, right? So I understand. Again, I took my setup up here. But if I didn't have this setup, this is what your setup would have been for the day. You have your key level. You see price completely rejects, right? It completely rejects this fair value gap. And you got to look for either a sweep, an inversion, something that makes sense. You can see you have an obvious trend line of liquidity. Price does what? Slams through it. Very aggressive, bearish volume, right? Volume peaks here. Price trades below what we call peak volume. You then, let's get rid of this one. You get a bearish fair value gap. Price runs through it. Literally all I would be focused on as soon as the close is here, or actually I understand trap candles, so I see this. I'm buying based on the next candle. Stop would go here. I mean, this move alone, that's your 1 to 2. Higher time frame, obviously, if you understand that this will most likely be your low for the day, you could target equal highs, trend line of highs. If you want, you can just hold that whole move. You can take pretty much a 1 to 7. That's pretty much what today would have been. But again, my setup wasn't down there. My setup was up here. And the reason why I took this setup, I know Miguel had the same setup, but I TP'd different than him. And the reason why I TP'd where I TP'd is because I saw that we had a 15-minute fair value gap. Again, this is one of your key levels, right? Your key levels for the day is what gaps are being respected and disrespected, and what's the overall trend of the market. So obviously you can see we tap into this fair value gap. We reject it. Now, what am I looking for in the market? I understand that we're rejecting, right? We're rejecting the obvious fair value gap. This was the open candle right here, which what did it do? Accumulate, manipulated, this candle distributed. This is called AMD. Like, I need you to actually write that down. If you don't know what AMD is, it's accumulation, manipulation, distribution. This is how the market moves, by the way. It's always AMD. It's always accumulating, always manipulating something, and then it distributes. And obviously, you can see the initial opening was bearish until we get down to that most important key level, which is that low time frame, or that high time frame fair value gap down here. But people are going to be like, well, Jack, why'd you take it if you knew that this was going to be distributing lower? Because for me, the model that I'm running right now, I only need about a 2RR. I don't need a big move. I see that we have a trap candle because this candle engulfed. I understand that the next candle is going to do what? retest it. I pretty much bought on the retest of this candle, targeted this candle that is manipulation. That is also going to be your order block. And after it taps into your order block, what does price do? Skedaddles. That joint just runs down. Like, this is literally my thought process. Like, if you can't tell, it's very analytical. But for me, that's what helps me, you know, be profitable. That's what helps me make calculated decisions in the market. It's not just like, oh, I just see an engulfing candle. Let me just take it because I know the next candle is going to be bearish with it. You have to use it in the right phase of the market. Like, someone in the chat tell me, if I see this, if I see that price has a fair value gap here, let me get rid of the other stuff so you guys can see it. If price has a fair value gap here with a trap candle that's also an order block, and price is already broke, gave something called a CISD, which is a change in the state of delivery, meaning that now we're going to push higher. If price has just done this, let me know in the chat, is there any reason I should look for a continuation of a sell? Or should I obviously look for the continuation of the buy, understanding that the 1 hour rejected the fair value gap? We have a breaker structure that some of you guys like to say it. I call it as change in the state of delivery because the market's now delivering higher. And I don't know why, but in my brain, that makes more sense. Someone said over leverage, slap it down. Brother. I hope you're trolling, bro. That's insane. No, I'm looking for a continuation of buys. It's super obvious. I'm looking for a continuation. I see that we have a fair value gap that's already been tested once. Candle didn't close through it. Even if it runs this fair value gap, I'm okay knowing that I have a trap candle that's also an order block, because this was also what the last candle before the up move, right? Like, you guys can see my brain's tying everything together. I don't have like an SMC model where it just has to be the sweep and then the mitigation. Like, you can technically say, yeah, this is a sweep with mitigation, but my brain doesn't see it as that. My brain, I have my dad's brain. My dad's like a absolute, like, I don't even know, like an Einstein dude. Like, he's just like nerds out very passionately about things he cares about. And for me, I have to look at things like this. I can't just be like, oh, turn my point off, I'm a quick buy. Like, no, I'm not doing that. For me, I would just take initially the 50% of the fair value gap. Because look at this. Even if price doesn't come back for this order block, it only touches this wick. Sometimes it's just going to hit that fair value gap and it's going to keep going, bro. I'm going to take at least 50% of the fair value gap. For me, what I'm doing is only need like a 1 to 1, 1 to 2. But again, if you want to take to a new high, you get like pretty much a 1 to 4.5. So very easy day with Dow. Dow was very easy. Whether you took a buy or you took a sell, you could have had either played really honestly play out. Now for excuse me, Nas, a lot of people, again, these LARPing mentors are like, oh, price was so bad today. You want to know the exact play that they took? And I'll tell you why it failed. This is the exact setup that they all took. I'm not saying like I'm like the best trader. I'm just saying I'm not doing what pattern traders do, which is what they're doing. They had like a, where even was it? Again, the setup was so bad I don't even know where it's at. Oh, yeah, this is insane. Anyone that can objectively look at this and say, well, that's an insane setup. So they looked at this bearish fair value gap, and their brain said, price closed through it. I'm going to put my stop below this candle right here, this wick, and I'm going to target like a 1 to 1 to 1 to 2. I mean, I guess you can technically say that we did what? We bounced off the bullish fair value gap. But here's the problem. There's just one little issue. Once their entry was like, quote unquote, in profit, which it was like barely in profit, but once their price was in profit, they don't see this. I saw a lot of guys on the 1 minute watching price action. Someone tell me in the chat let's see who's actually been learning. You know what? I'm gonna have someone. Let's see who can answer this. On the 1 minute, does this give you an obvious scenario that you're probably not gonna continue higher here? Let me know if is it obvious. Like a couple minutes into this entry, does it become obvious that you should not even stay in this? You need to take out. Let me know. Because for me, I'm looking at this like, yo, setup wasn't even there. Y'all are just literally pattern trading. Again, you can't trade patterns. Like, you have to understand price action. You have a 1 minute engulfing candle, right? You have a 1 minute engulfing candle with engulfing volume. What happens when you have an engulfing candle with engulfing volume? What does the next candle do? It goes the same direction. Like every time. Am I wrong? Engulfing candle, engulfing volume. The next one's going to be bullish. I see this. I would have sold here. Every day of the week, I would have took my 1 to 2 here. Sold this. Every day of the week. I would have sold that. Every day of the week. And look, it just ripped. It literally like dunked. It dunked on their stop loss. Like, I don't know if you guys know who PB Trading is. He's like a guy named Patrick. He's not profitable, by the way. I already know he's not. The other guy, he's probably profitable, but the white dude of the group, he's definitely not profitable. Because, I mean, dude, his setups are just garbage. But he pretty much just seen, like, the smallest close. He pretty much bought here. And then he, like, grabbed a guitar and started playing and, like, having fun. I'm like, bro, you're just clickbaiting. Like, you're literally clip baiting. You're trying to go for a clip, bro. Like, you have to understand, where are we at in the market? Like, for me, again, I can't play just an inversion. I need to see more. Like, that could have been a setup for them, like I said. But again, you need to see more. And the way that you could have seen more is, first off, you had the easiest time to buy up. Where was it? What time frame was it? Was it the 1 minute? I mean, bro, I marked this out for a reason, because it was just an easy buy. Price comes down, price engulfs. Look how price doesn't come back below this low. Like I said, bro, I would have just took a 1 to 2, just like that. Risk my risk, took a 1 to 2. I'm not scared. Why? Because things are back tested. Like, there's literally ways where you could just grab continuations in the market. Same thing when price, you know, starts to come back into the now next fair value gap, which was below it. You have another fair value gap right here, where price didn't touch. When price this is what I'm saying. When price rejects this hard and you start seeing the other candles not following along with it, and this is the only wick that is this low, you're going higher, bro. I'm telling you. If you see one wick only touch this fair value gap, one wick, like 1 or 2, this has 1 wick, 2 wick, 3, 4, 5, 6, 7 up here. Like, bro, that's not probably going to be the fair value gap that fully holds. This one, where it barely touches and absolutely runs, that's probably going to be the next leg up. And you can get price action to follow along with that. Watch. What do we have? We have a break above this high. You have a fair value gap right here. I don't know why I did that. Why did I delete that? You have a new fair value gap right here. Price rejects, rejects, rejects. No body closes. Look at this candle. Look at this candle. This candle engulfs. Look what happens. I mean, I don't know what else I have to say, bro. And the candle doesn't need to have engulfing volume, but it is, again, it's an extra confirmation that a lot more money is getting pumped through that candle specifically, and money's going to keep following along with it. Like, notice how look at this. The only time where it rests in the fair value gap and then gives you the engulfing candle, I can't make this up, bro. What does it do? It just doesn't come back. It now runs. Like, I hope some of y'all are hearing me, man. I can't make it up, bro. Like from just straight back testing, there's many ways you can make money in the markets. But here's the thing. You're not going to take every single different idea, right? Your brain should be limited down to one or two ideas, focused on price action and the phase of the market. Stop trying to just only focus on a pattern. Your patterns aren't going to get you paid. Like I've been saying it, just because you see an inversion doesn't mean every inversion plays out. Like look, premium example was this one. I just took it for a nice 1-to-1. This is, again, you have to use something that has a confluence, right? What do you see? You have a candle with the most amount of volume, price trades below it. But look, you have New York low right here. Tokyo trades right below New York low. What happens after you take a session? Most likely you're going to get some form of a reversal for like a quick 1-to-1, maybe a 1-to-2. What does this do? You get an inversion, right? You get an inversion on the 1 minute. You see that we have a trap candle right here. Look what happens when it makes the bearish trap candle. Boom. It just doesn't come back. Same thing here. Boom. Look, and then you get the reversal right here. You see that this price engulfs with engulfing volume, by the way. You can catch a nice little 1-to-1, 1-to-2. Guys, we got to stop making trading difficult. Like, trading in general is not too hard. Everyone in the chat could attest that, right? Trading in general is not too hard. It's not too hard. The thing is it's hard to be disciplined for a lot of people, right? A lot of people don't want to wait for their confirmations. They don't want to wait for a 5-star setup. They say they lose a trade, they want to get instantly back to get their money back. When in actuality, that doesn't get you paid. Like, you know, like just because you lost and you want to get back in, that's not going to get you paid. Right? That doesn't get you paid. You got to get paid by following your rules, following your risk management, and staying consistent with it. Like, again, for my gold traders, Valentino called out sells. This is where I would have sold. Engulfing candle with engulfing volume. Retest the trap candle. My stop would have been at this high right here. This one above this one. Because this is a little bit too close for comfort for me. Stop would have been down. Boom. That's like a 1-to-5 right there. If I would have took that. I took this one over here. Based on the engulfing of this. This becomes now your order block. Retest. I go down to the low time frames. I see that we have an inversion. I saw that this candle was when I entered, it was a fully closed candle. And then it like shot back up like maybe 10 seconds after it was like fully closed. But it still went my way. Like I still got my 1-to-2. So I'm not complaining. But again, look at the buy back up. Engulfing candle, engulfing volume. Even if you're a 1-to-1 trader, you cannot tell me that this is so hard to get a 1-to-1. You can't tell me it's hard to get a 1-to-1, bro. If you are just patient enough, you see this engulfs, this candle retests, now this order block comes down. Bro, you gotta look at the market structure. Market structure is king. AMD and market structure is king. Understanding what phase you're in, and is the market creating higher highs or higher lows? Is it creating lower highs or lower lows? You know, you gotta like understand. Like I shout out Vinny, because like when I was starting out in trading, his thing was always like, you know, market structure. Like focus on, you know, where the market's moving. Because bro, a lot of us like to like overcomplicate it with all these terms and stuff, but at the end of the day, the more complicated your trading is, the less likely you're going to be profitable. And the reason why I say that is because you're focused on so many different things at once that you can't zoom out and just look at the bigger picture and take an easier setup. You know? Like we got to just stop being ourselves sometimes, you know? We really got to stop being ourselves. Gold. Let's look at gold for today. I don't even know why this alert's here. Where's New York at? When did we end at New York? I wouldn't have been trading them. Let's go like here. New York. New York. I know a lot of people took New York setups today. So, or not New York, gold setups. Again, you gotta understand, where is the narrative of the market? Higher highs, higher lows, higher highs, higher lows. Price is more likely going to remain bullish for New York, especially when you see this. Let's drop to a lower time frame. We can find a better one. You got... Nah, that's not really it. Yeah, that's technically a fair value gap. But I would have just looked at more at the bigger picture, to be honest. All right. So you have no candles closing through the fair value gap. You have 1 rejection, 2 rejection, 3 rejection, 4 rejection. When you see a rejection this aggressive at 7:30 on this 30-minute, again, what do I like to say? If you want to take a very easy setup where you can get like your 1-to-1 or 1-to-2, wait for the engulfing candle. Like, bro, look at this. You would have had 0 drawdown. It would have just took an hour to hit your TP. You would have had no drawdown. 0. Not a single point of drawdown. It just went. Right? But obviously, if you want to get lower time frames, you know, try to figure out what's the whole move here. You have an obvious break to the upside. Price takes London high. It comes down. Rejects this fair value gap right here at the 3-minute. Okay, cool. Now you need to start looking for a continuation. This is what your goal should be. Now you need to look for a continuation. Your goal isn't to just take the fair value gap, because there are times where this could slam through and you'll get cooked, right? You want to look for a continuation. And boom. Right here. Blessed you with a continuation. Price creates now an order block. That's also a trap candle. We engulf with engulfing volume. Stop right here. Boom. And look at this. Let me know in the chat, does price ever come back? Again, this is how you indicate your low for the day. Does price ever come back? Like for this whole leg up. Does it come back? No. It doesn't come back at all. If you even want to take to the next high, boom, right there. Right? Because look at the phase that we're in. Look at the phase of the market that we're in. We have accumulation, manipulation, distribution higher. Right? And now what does it do? It rebalances the manipulation leg. And what happens after the manipulation leg gets rebalanced again? It distributes again. Like I said, it's phases. Everything's phases in the market. It's going to follow accumulation, manipulation, distribution in somehow, some way, or some form. Right? That's PO3. Power of 3 is accumulation, manipulation, distribution. Find a fair value gap, or an inverse fair value gap, or a trap candle with an engulfing candle, and then just follow the market, bro. Same thing here. Look at this trap candle. Even if you're a trap candle trader, you're chilling here. You get to put your stop loss somewhere, maybe like 50% of that wick. Just continue up on the market. Fair value gap trader. Right here. Price taps into your fair value gap. You get on the lower time frame. I can't make this up, bro. I can't make this up. Engulfing candle. Bye-bye. Yo. I really can't make this up, dude. I can't make it any easier for y'all, bro. So 1-to-1, you would have hit your TP in like 1 minute. That would have been a lit day. Just a 1 minute setup, just boom. Right? And if you want to look for an inversion setup somewhere, we don't really get any inversions here. You get an inversion setup right here. Boom. Right when price closes above the inversion. Look, Wow, it's almost like it's at the exact same spot, the exact same entry as it would have been with this trap candle, with the engulfing candle. It's the same entry. I'm telling you, you can pair everything together, bro. Once you start pairing everything together, you start getting saucy on the markets. And if you want to catch the pullback, wait for the trap candle that has the engulfing candle with engulfing volume. Like, bro. And then it just dumps. Like, come on, bro. Like, I hope it's clicking with someone right now, bro. The way that I'm explaining it, it's not hard. It's not that hard. You just have to be disciplined and patient and wait for something that looks and makes sense to you. Again, you're not going to win 100% of the time. That's not your goal. Your goal in trading isn't to win every day. Your goal is to protect your capital, go for RR that makes sense to you and you know you can be consistently profitable on, and then just continue to execute every day. Again, like if you're a 1R trader and you can win 8 out of 9 times 10, wow, English, that's lit. 8 to 9 times out of 10, you're set. You're chilling. You're a 1 to 2R trader. You win 5 to 6 times out of the, the week or out of the month, really? No, not the month. Just on average. I'm not saying month because month is kind of bad. But on average, you're chilling, bro. You're absolutely chilling. Again, you just got to find your setup. Whatever makes sense to you, just keep following it. Again, this is how you would have caught this reversal. If you wanted a little 1 to 1 or 1 to 2. That's like a 1 to 2, actually. My eyes are freeballing it, but I can probably guarantee it's a 1 to 2. Oh, that's close enough. Yeah, that's close enough. But I mean, that's just how the market goes, bro. So that's pretty much how you find your daily bias. Your daily bias is focused on key levels, rejections off of fair value gaps, understanding what sessions you're looking at. Sessions mean so much, and I'm glad that like you guys seen the boy Valentino. He started to use sessions. We texted about it before. I was like, yo, I think something that would be dope. Start checking out some sessions. I'm telling you, you'll catch nasty buys, nasty reversals. He's been plugging that in on his calls. Obviously, he knew about it before, but he didn't know about the Fair trading tool, which made it way easier. So that's super dope to see. But like your key level is understanding what's getting, respected, what's getting rejected, and then make your like the setup that makes sense to you. Just take it. And again, you don't need the whole move. We gotta stop trying to take 10R trades like every day. We gotta stop doing that. That's not your goal. Your goal isn't to catch the whole move. A lot of people used to like hate on or clown AWOL for like how he does support and resistance trading, but something that always stuck with me that he would talk about was the fact that you're not trying to catch like the riptide. You're not trying to catch the whole wave. You're trying to catch a little bit of the motion. You're trying to catch a ripple in the water. Your goal is to catch a ripple, right? Go for a 1 to 1, 1 to 2. Only go for a 1 to 1 if you have good analysis and you can win pretty much 4 out of 5 days out of the week. If you can't do that, then don't go for that. But if you can do that, then sure, you can do that. But your goal is to obviously just be focused on where's price going, bouncing off your levels, and then just taking the setups that make sense to you. Someone said just got a 100K Lucid account. I chose TradeC platform. I'm like, I don't know anything about TradeC, bro. I don't know anything about it. I've heard like a lot of people have been gassing it. I've never heard anything about TradeC. I personally just trade on TradingView. I don't know anything about TradeC. So if anyone does trade on that, they'll know. But I don't know anything about it. I know a lot of people have been like gassing that it's gonna take down TradingView. I don't ever see that happening. TradingView has been here forever, bro. Like TradingView has been here for the longest, bro. Usually like what really starts something doesn't fully ever go away. And I'd rather just continue to use TradingView because all of these other traders are already using it. It's not really going to go out of business. So I don't care for TradeC. But the platform looks cool. But again, it's not really my thing. Man, I wish silver didn't have so much risk sometimes, bro. Because silver is such an easy pair, bro. Easiest sells of your life. Where was No, New York was gross though this morning, but Asian, this is just like the easiest sells of your life. It's actually way too easy. Finding your rhythm in the markets helps so much for real. That is very true. Your goal is to find your rhythm in the market. And once you find it, stay consistent with it. Keep following along with it. Was there any assets that sold today in New York? Like the day was bearish. It wasn't just bullish then bearish. I wanted to do like a bearish scenario, but gold for most of the day was bullish. And again, I showed y'all the reversal. The reversal was right here. So that's where you catch the whole move down. This is a continuation you could have. This is a continuation you could have. Who this Joker? I don't even know who you are, bro. But yeah. Reversal would have been here. Buy up. Obviously, the fair value gaps. Easy rejection. Even from like the left, I know Jason caught this. I'm pretty sure this is what he was targeting. I could be wrong though. But Jason was looking at kind of the rejection of the fair value gap to the left. And then this rejected pretty hard. Yeah, this rejected really hard. It filled the unfilled candle at the bottom, which has no bottom. A lot of the times you'll see these type of candles get filled. Got filled. And then bounced off the fair value gap on the 3 minute. And then pretty much it never really came back. How do you personally trade gaps? Like, do I just take entries off of fair value gaps? I don't really take entries off fair value gaps. I look at what is rejecting and respecting. And then I look at either... I don't really look at inversions too much, but I love inversion setups because they're kind of easy. But I'll look at like an inversion, or I'll look at basically like trap candles and momentum. Like this is more of a trap candle momentum. You just buy up, stop at the low, just target the next high if you want, or the next lower high right here. But again, I'm not just buying based on I see this reject. I need more confirmation because a lot of the times you can see it reject and then the next candle just rips through it. I've seen that happen a decent amount of times. So for me, you know, I'm not sold on I'm not sold on just taking the rejection. I need to see more. Just because something rejects, I need to see more. Like this rejected, like in Asian, right? This was a 30-minute gap. It rejected, but I needed to see more. Like I needed to see price run past the trap candle, give either an inversion of some form. I didn't take this one. I actually didn't even see it. I walked away. And then I came back around like 619, 618. And then I saw a little quick move. Pretty much just took to this next low and then got out. But again, I don't take just because it has, you know, what's it called? The bounce. I don't take the bounce. I want to see something that gives me confirmation that we're pulling lower. Like this would have been a better setup if anything. This candle gives you confirmation you have room to still pull down. Like right now, this candle would have gave you confirmation you still have a bit of room to still pull down. Like I'm focused on, you know, obvious movements with candles. Like you need to understand candle like anatomy. I've said it on the call before, but understanding like why candle bodies do what they do and what they mean, it can help you make a lot of money, bro. Like this engulfing volume, you could have caught the easiest 1-to-1 of your life right here. And again, you don't need 1 to 8. Obviously, I prefer to trade New York where you can get bigger moves and the bigger moves become a lot easier. But, you know, not Asian people, Asian session, like this for prime example, trap candle, engulfing candle with engulfing volume slams, you have your sell. Price can just continue down. Not much volatility, quick, easy move. That's pretty much what you'll get in Asian. You'll get continuations in Asian is all you should ever be looking for. Never look for a reversal. Unless it's at a session. I was going to say I'm a hypocrite technically because I took a reversal, or I marked out this reversal. But again, this was because the session was there. It's the only reason I took it. Because this will probably continue up a little bit more. now that we did take this low to continue higher. Unless you don't have that low, like I said, you're not using it. You're just focused on continuations in Asian. And then New York, whatever the move is, with the right candle structures and the right volume, and you see your play, that's the move you'll take in New York, obviously. Do you use EMAs when trading the lower in a specific way? Or is it just a high attack frame? The only reason why I ever have these on my chart is just for like crossing on like 4 hours. Just to like know like, oh yeah, once the white crosses over the black on the 4 hour, we're gonna have a bullish continuations for like the next couple of days. So my brain is now focused more on bullish than bearish. Like same thing for this. Black crosses, or opposite thing for this. Black crosses over the white. Obviously, you had bearish price action for like a couple days. I'm more focused on obviously what? Taking bearish action, because overall, bearish is more likely to happen than bullish. So that's literally the only reason I have them on here. I don't ever use them for anything other than what's it called? I only use them for overall momentum. Like, what do I want to look for on the day? And if anything, if you are a live account trader and you have the right confluences and you start using your EMA with the crossing, you can catch big moves. I forgot what his name was, but there was a guy who was like actually profitable. Like, he actually can show that he has like broker statements and like statements of withdrawals hitting his bank, and he pretty much kind of just trades that, and he just catches like, he'll just catch the move, and he be moving. He be moving in the profits, bro. It's not bad for a macros perspective. Again, lower time frames. I only had him on lower time frames because I used to trade a different way like 8 months ago, 9 months ago. But from what I'm teaching now, it's just basically what I've back tested and what I've, has made me profitable and what works. At least for me, and it's worked for other people. I mean, a couple of the boys that have been starting to adapt and trade my way, or not my way, like not like an ego way, but like my version of thinking, that's helped them expand. Like, okay, cool, I can start thinking about this in a better light and then start making better moves on it. I mean, bro, they've been smacking the markets, so you know, I love seeing the boys win, man, or the girls, but there's not really any girls in Arizona in our group, so I just say the boys. All right, I got you. One trade each day for 7 days, been printing payouts. Wait, I didn't even read your other chat. This guy's chat. I'm on a 7-day win streak with Asia close manipulation, and it's actually so good and sitting up very nice today again for shorts. Asia close manipulation. Yeah, I mean, just again, I just said this like a couple minutes ago. This was gonna just start pulling the market lower. Like, these are the continuations that you'll realistically want in Asia session. Like, bro, Asia session with gold and you have that confirmation, it's very nice. Gold setup happening right now. I mean, I can see it, continuing to trickle down, but I'm not interested in taking it. I'm waiting for New York tomorrow to trade. I'm not really focused on anything right now. I would have already entered right here. I wouldn't have really waited for that. If I was just targeting a 1-to-1, yeah, I would have just entered there, stop here, target a 1-to-1 down here. But I'm not focused on any setup right now. I don't personally really call out signals. It's not really my thing. I'd rather just teach like the straight value and then see people execute upon it in their own trading. Because at the end of the day, trading is strictly based on you versus you. Can you get results or not? And if you can't, and you've actually tried and you tried and you tried and you really put the work in, again, not everyone's going to make it in trading. That is the cold reality. Not everyone will. Do I think everyone has the ability in the like consciousness to learn it? 100%. Like I've already said, everyone can learn a strategy. Everyone can learn the phases of the market and how it's moving. But what are you going to do when you start going in the reds? What are you going to do when you have a losing trade? What are you going to do when you're having a down week? Right? Like you got to pair everything together and understand that us as humans, we are emotional creatures and we will probably make a lot of dumb decisions. And it's your job to navigate that, and it's your job to stay more consistent than you ever can, and then just rinse and repeat day in, day out. Focus on your dubs, Focus on documenting everything. If you're not documenting your trades, you have no idea what's going right, what's going wrong. You have no growth if you have no documentation. That's why I say, like, you know, I don't like when people trade and they don't document anything. It's like, bro, like, you're not going based on anything. You know? Someone said go on the daily. I mean, I'm on the daily. Yeah, this was my daily bias right here. Pretty much what I already went over. Higher time frame trends, identify where price is delivering from. BSL, which is buy side liquidity, or SSL. If you trade inversions, look for an SMT, which again, I'll either trade the inversion or I'll trade the engulfing candle with engulfing volume that has a trap candle somewhere in a fair value gap. Determine where what fair value gaps are getting respected and disrespected. Bullish, say we're in a bullish scenario, right? If your bearish fair value gaps are getting disrespected while bullish is being respected, you're going to continue, delivering to the upside, vice versa for sells. Mark your higher time frame liquidity draws, and then form and manage your bias using if-then logic, meaning like if this rejects this, then this will happen. Again, you're not going to like fully be like, oh yeah, I know exactly what the market's doing. Because once you start having ego like that, the market will humble you really quickly. So your goal is not to just think, oh, I'm so right, I'm so right, I'm so right, I know exactly what I'm doing, I'm him. Don't do that. Don't live in that type of fantasy, because you'll be hurt by the markets pretty quick. But yeah, I mean, there's not much else. It's more just a shorter call because I want to really brainstorm what I can do next week for like a bigger call, because like my last 2 weeks have been big calls, right? The psychology call, I know a lot of people like that. I got a lot of good like feedback on that. And then the call before that, with the 4 phases of New York session, kind of is similar to this, but obviously was all of the phases. This is more just like I want to just tell people like go for high probability, which is continuations. Whatever the trend's in, just keep following it. Stop. Even if you see a reversal and it plays out for a bit, your goal isn't just to catch a reversal. Your goal is to just keep taking where the market's going. So, yeah, I hope people took away some value with continuations, and how to pretty much just trade New York based on your continuations. Obviously, just finding your setups and then staying disciplined. But I appreciate everyone for hopping in. If you didn't watch from the beginning, or you actually want to be able to have this on repeat, again, it's on the page. You'll have it on the live feed. And yeah, I appreciate y'all for tuning in. And let's get it, y'all. Peace.